A lot of the figures that we see in the economy point to a no-landing environment. However, when we look in more detail to what is going on, there is a lot to question about this no landing. Foreigner demand of sovereign debt has been declining quite significantly relative to net issuances in the past years. In this period of craziness in government spending, what we have seen is that the federal debt, national debt in the United States, has risen to $35.6 trillion. And that increase has been out of this world. Very rapid since 2021, in fact, accelerating with a completely unsustainable deficit. However, global foreign demand for treasuries has barely increased. It has increased, but not even close to the level of increase in debt. Therefore, what this shows is, courtesy of Bloomberg, is that North Americans, that US citizens, are actually the ones that are being supporting the national debt, and therefore the entire imbalance of the national government, the entire imbalance of the federal government is just getting worse and passed on to US citizens. The idea that foreign demand is going to basically absorb all of the increase in debt of the government makes absolutely no sense. Let's go to the next graph. If we can see in the next graph how a very important factor, it's not just that foreign demand is declining, but that Japanese demand, which was actually rising, is also declining now. The reduction in confidence in the US debt is the reduction in confidence in the US government solvency, and that means reduction in confidence in the US currency. And if the government doesn't pay attention to all these factors that I've just mentioned, it will be in severe trouble, because these are warning signs that show that the US could lose its world reserve status if global demand for treasuries continues to be low relative to net issuances. Let's go to the next graph, which talks about what is going on with the jobs market. We have seen a blowout record jobs figure, absolutely phenomenal. However, number of shadows in that figure, courtesy of Zero Hedge. Number one, part-time jobs relative to full-time jobs. It's an increase, massive increase in part-time jobs and a very significant decrease in full-time jobs. The quality of the labor market is getting worse and fast. Let's go to the next graph, which also shows us an important factor. In this one is that labor participation rate is not improving as expected. Why is that? Oh my God, because basically the labor force is increasing with foreign workers. And foreign workers are basically the entire increase in the labor force and all of the increase in the jobs market. That is why there is such a significant level of discontent. Not because of the migration, but because of the reality that what this figure is showing us is simply that there is more people in the labor force. It's not showing that the labor market is getting better relative to itself. It's showing us that more people are in the labor market coming from abroad. Let's go to the next two graphs, which are exceedingly worrying. Number one, the massive increase in government jobs. Oh my God, massive increase in government jobs ahead of an election. Very concerning because it disguises the jobs figure. Let's go to the next graph, which also shows that in more detail. Here you have, massive increase in government jobs with a significant decline in private sector jobs. That is not a positive figure, my friends. That is not a positive figure at all. This shows us why the economy is not as robust as the government tries to say. On the one hand, very elevated debt. On the other hand, a very weak, in fact, figure of jobs because of migration and because of government jobs. Let's go to the next graphs, which are going to talk a little bit about inflation. Inflation decline has come mostly from the energy component, as we can see in this graph courtesy of Bloomberg. That energy component is coming back up and coming back up fast because of geopolitical risk and because of oil prices. So we need to be aware of a bounce in inflation, because almost all of the figures in the core inflation have not improved significantly. In fact, services, shelter, etc., continue to be significantly above where they were. Let's look at the next graph, which shows us the element that we should be worried about. As I said before, the entire improvement of the inflation figure, annualized inflation figure, came from energy, but energy is rising and rising fast because of geopolitical risk. Not just oil, but the entire commodity complex. So we should be very worried, because inflation is always a monetary phenomenon. This is happening not just because of geopolitical risk, but because of the concerted effort of cutting rates. Therefore, what we are likely to see is more money in the system going to relatively scarce assets. Inflation is always a monetary phenomenon, and money supply is growing, debt is rising, and the jobs figure is not that strong.
Thank you for watching this video. Please subscribe to my channel, like my videos, leave your comments below, and keep defending freedom. Thank you very much.